Have you stopped to think about how you pay for things these days? I mean, really think about it. From your morning chai to your monthly bills, that physical cash in your wallet is probably feeling a little lonely, right? It's all about a quick tap of your phone now. But that's just the surface. What we're seeing is a massive financial revolution happening all across India. And it's not just changing how we spend, it's reshaping the very idea of money and banking. So let's dig in and figure out what this really means for all of us.
To really get a handle on this, let's start with a bit of a head-scratcher. The State Bank of India just announced it's hiring 12,000 new officers. Okay, pretty standard. But here's the crazy part. They expect 85% of them to be engineering grads. And it's not just them. All the big banks are suddenly prioritizing tech skills over traditional finance degrees. So, what in the world is going on?
Well, the answer is that traditional banking is having its big tech moment. And this isn't just about rolling out a slicker mobile app. No, this is a fundamental fight for survival, driven by a perfect storm of new pressures.
I mean, just look at what they're up against. On one side, you've got these super agile fintech startups that are basically eating their lunch, stealing customers with cool, easy-to-use services. On the other side, you have the Reserve Bank of India, which is pushing banks hard to beef up their IT security. Because let's face it, when everything is digital, a single failure could be catastrophic. Throw in the explosion of AI, which can personalize everything, and a whole new generation of customers who want everything instantly, and you can see the squeeze they're in. Banks are caught right in the middle, and really their only way out is to become tech companies themselves.
And this whole transformation, it isn't just about servers and code. It's really about people. Banks are completely re-engineering their workforce, hunting for a totally new kind of talent to lead them forward. The very definition of what it means to be a banker is changing right before our eyes.
And this, right here, shows you that shift in action. The familiar roles we're all used to, the face-to-face jobs, they're being automated. And in their place, banks are desperate for data scientists who can build smarter loan models. They need cybersecurity experts to guard the new digital vaults. And they need AI and machine learning engineers to create the kind of intelligent services we're all going to expect. It's a total redefinition of a career in finance.
And let's be clear, this is a huge pivot. We're talking about a projected jump of 22.5% in the tech workforce inside India's financial sector by 2026. That's massive. This isn't just about plugging a few holes. It's a strategic, industry-wide overhaul. In fact, it's making the finance sector one of the biggest recruiters of tech talent out there, right behind manufacturing. So what skills are they really looking for? Well, this chart breaks it all down. You've got product managers at the top, which makes sense. Someone has to design all these new digital tools. Cybersecurity, as we saw, is a huge priority. But then look at this big chunk: AI, software development, and data science all together. It paints a really clear picture. Banks aren't just in the business of holding money anymore. They're in the business of building complex technology.
But hold on, the story doesn't stop with just the banks changing. While they're frantically trying to reinvent themselves, the very nature of money, the thing they handle, is also being completely reimagined from the top down. So let's talk about the e-rupee, or the digital rupee.
Okay, so what exactly is a CBDC? Let's break it down real simple. The money sitting in your bank account today, that's technically an IOU from your bank. It's a promise to pay. A CBDC, the digital rupee, is totally different. It's a direct claim on the RBI itself. Think of it like holding an actual banknote in your hand, except it's purely digital. It's sovereign money.
Now I know what you're probably thinking. Wait, I use UPI and digital wallets all the time. Isn't that already digital money? Great question. But here's the key difference. When you use UPI, you're really just sending a message, an instruction, for your bank to settle up with someone else's bank later. With the digital rupee, the transfer is the settlement. The transaction is the money moving. It's just like handing someone a physical bill. And what could be a real game changer is that it's designed to work even without the internet, which to be huge for financial inclusion.
But you can't just flip a switch and launch a new form of currency for over 1 billion people. That's not a simple task. And as researchers have started to dig into what the public actually thinks, they're finding this fascinating mix of excitement and some pretty deep-seated worries about this new form of digital cash.
And this brings us to the reality check. The technology might have all this incredible promise, but there's a huge gap between that potential and where the public is right now, in terms of understanding and trust.
So, what are the big fears? Well, here they are. A full 60% of people surveyed are worried about their digital money getting hacked and disappearing.
Right behind that, at 57%, people have serious concerns about who gets to see their financial data. And then, 40% are worried about the potential for government surveillance. These are not small issues. They hit right at the core of what we expect from our money, that it's safe and that it's private.
This number right here kind of says it all. When people were asked to rate how safe the digital rupee is on a scale from 1 to 5, the average score was a very lukewarm 3.2. That's not a total rejection for sure, but it is definitely not a ringing endorsement. It's a clear sign that people are cautious, that they're taking a wait-and-see approach.
And that brings us to the key takeaway here. The biggest hurdle for the digital rupee isn't the technology, it's trust. And get this, only about 15% of people feel like they really have a good handle on how this whole thing even works. That is a massive knowledge gap. And until that gap is closed, widespread adoption is just not going to happen.
So let's bring it all together. We've got these two giant trends happening at the same time. You've got banks turning into tech companies to handle your money, and you've got the RBI introducing a new, completely digital form of money. So what does this collision of forces really mean for your future?
For you, it really boils down to four main things. One, the world of finance just became a huge career opportunity for anyone with tech skills. Two, your everyday banking is about to get a lot smarter, a lot more predictive, and way more personalized. Three, the very form of money you use every single day is on the brink of a massive evolution. And four, the next big challenge for all of us is going to be navigating these security fears and building up our collective digital literacy.
And this entire transformation, it leaves us with one last profound question to think about. We're moving from a world where money is a physical thing you can hold to a world where it's just a string of data. And in that new world, who really owns and controls that data? That's the core question at the very heart of India's financial revolution.